What's up, guys? Welcome to MoonShot Money, where we're chasing those elusive multi-baggers. Thanks for spending a few minutes with me today. We certainly don't take that for granted. Ginkgo Bioworks got rocked last week after a short attack by Scorpion Capital, but since then have recovered quite nicely. SOFI has been on a rocket over the last week, rising over 12%. We knew it was going to pop, we just did not know when. We are in accumulation mode on both of these potential moonshots, Ginkgo Bioworks and SOFI. Mid-October updates. That's today's investigation. I'm Chase and this is the MoonShot Money channel. Are you ready? Let's go. As always, do your own due diligence. This is not investing or financial advice. Ginkgo Bioworks has come clawing back from the Scorpion attack last week to posting an actual 7-day profit as of this filming. That is partly because of new coverage by Wall Street analyst. William Blair analyst Matt LaRue opened his new coverage with a outperform buy rating. Why? He believes that synthetic biology has the potential to revolutionize virtually every industry. LaRue claims that Ginkgo Bioworks platform will make it a long-term leader in this sector. We expect Ginkgo to capture considerable value by democratizing cell programming. LaRue wrote, adding that this company's platform makes synthetic biology more accessible for companies. That's exactly what we've been saying lately. Scorpion Capital was behind last week's report and went so far as to claim that the company was a scam created by hedge funds and CEO Jason Kelly was a snake oil salesman. What was so weird to us was that the report was so over the top. It wasn't a be careful or be cautious report, but more of a hit piece. I wonder if they were short DNA stock. We bought the dip on that day and discovered that evening that Cathie Wood had also bought over 8 million shares. As of this filming, ARK has made millions of dollars on DNA since last week. Thanks, Scorpion. Follow us over on Twitter at MoonShot Money 1 for all the latest from our team. Don't forget to like and subscribe here on this channel if you like these videos. Next is SOFI. There's a brand new amazing price target out by Betsy Grossick of Morgan Stanley. The price target is $25 per share. She called the company the fastest growth story in consumer finance with a leg up on rivals even as competition heats up among neobanks looking to woo younger customers. In September, Jefferies at Mizuho Securities also initiated coverage of SOFI with a price target of $25 and $28 respectively. So you can begin to see the consensus forming here. SOFI has been going after millennial and Gen Z customers with abandon, and it's beginning to show in a very good way. Grossick also is upbeat about SOFI's pending bank charter. SOFI announced in March that it planned to acquire Golden Pacific Bancorp, which was expected to speed up the process of getting approved for a bank charter. And Grossick sees tremendous opportunities for SOFI once that officially happens. SOFI filed for the bank charter last year, and while that process isn't complete, the company has been granted preliminary approval. As I mentioned, SOFI then agreed to acquire Golden Pacific, a financial institution in California, which increases the chance that it will ultimately be granted the charter. So, all is good on that front. Grossick also said the charter alone could boost total revenues by 10% in its first full year, given the benefits to net interest margin. When we at MoonShot Money invest, we are looking for great growth prospects, and that's exactly what we saw in SOFI. Grossick went on to say, we expect SOFI's customer base to double in the next 2 years, from 2.6 to 5.3 million, after more than doubling in the past year from 1.2 million. So the growth is there and forecasted to be there going forward. The company wants to be one of those one-stop shops serving the financial needs of high-income earners who are poorly served by traditional banks. It offers an array of different lending products, an online brokerage, and SOFI also acquired the fintech Galileo, which helps other fintechs with front and back end functions. We can't make a video without mentioning Galileo. In the second quarter, SOFI disappointed investors when it missed earnings estimates by a wide margin and reported a loss of more than $165 million. But $144 million of that loss was was attributed to non-cash and one-time expenses. The company's student lending division also took a hit due to federal policies related to the pandemic, but those are only temporary. SOFI did show strong growth in its SOFI Invest division, which includes its online brokerage and equity capital markets and advisory services. We believe we're going to see great earnings report for the third quarter very soon, causing the price to push towards Grossick's $25 target. Third quarter results will be announced on the 10th of November, with analysts expected revenue of $255 million, which would represent a 10% increase from the second quarter. Only 29% of shares are held by institutions right now, which is quite low for a company of SOFI's size. But watch this. If institutions increase their ownership over time, that can be a very bullish sign. In June, institutions own just 11% of the shares, while retail investors own 74%. This means the trend is heading in the right direction. Bullish. The remaining shares are held by insiders, venture capital, private equity firms, and public companies. It's exciting to see companies' insiders own a substantial stake in the company, meaning that the company's management team has some skin in the game. Our average cost is $16.03 as we were aggressively buying in the $15 range. As of this filming, SOFI is over $19 a share and we're up around 20%. We are looking forward to those $25 price targets and beyond. DNA and SOFI are two of our favorite stocks right now. Do you own either or do you own both? Let us know in the comments below. Maybe which one would you rather have, DNA or SOFI? We love to see the comments and we try to respond to each and every one of them. We appreciate you all so much, and if you would give us a like and subscribe on the way out. Earn more, save more, invest more, and give much more. Always remember, if you're not interested in your money, someone else is. Have a great day, everyone, and we look forward to celebrating on the moon.